What happens if you invest $10 every single day? What if I told you that just $10 a day could completely change your financial future? It sounds too simple to matter, but over time, this tiny habit could grow into something surprisingly powerful. Let's find out what really happens when you invest just $10 every single day. Imagine waking up every morning and spending $10. Most of us wouldn't even think twice. A coffee, a snack, or an online purchase can easily cost that much. But what if instead of spending it, you invested those same $10? At first, it feels almost meaningless. $10 doesn't seem like enough to build wealth. But investing isn't about making one big move. It's about making small, consistent decisions over a long period of time. Let's do some simple math. Investing $10 every day means you're investing about $300 every month, or roughly $3,650 every year. Now here's where things get interesting. If you simply saved that money without investing it, after 10 years, you'd have around $36,500. That's not bad at all, but investing gives your money the opportunity to grow. Historically, broad stock market index funds have averaged around 8 to 10% annual returns over long periods. While no investment is guaranteed and markets always go up and down, this average helps us understand the power of long-term investing. Let's assume an average annual return of 8%. After 10 years, your investment could grow to approximately $55,000. After 20 years, it could reach around $180,000. After 30 years, you may have nearly $500,000. And after 40 years, that small daily habit could potentially grow to over $1 million. Notice something important. You didn't become wealthy because you invested a huge amount. You became wealthy because you stayed consistent. This is the magic of something called compound growth. Compound growth means your investments don't just earn returns, they earn returns on previous returns. Over time, your money begins working for you, and eventually, your gains can grow faster than your own contributions. Think of it like planting a tiny tree. For years, it seems to grow slowly, but as its roots become stronger, its growth speeds up. Investing works in a very similar way. The hardest part isn't finding the perfect investment. The hardest part is staying patient. Many people quit after a few months because they don't see instant results. Others panic when the market drops and sell everything. Ironically, market declines are often when long-term investors continue buying because they're purchasing investments at lower prices. Another powerful lesson is that starting early matters more than starting big. Someone who invests a small amount for 40 years often ends up with more money than someone who waits 20 years and invests much larger amounts. Time is one of the greatest advantages an investor can have. Of course, it's important to remember that investing always carries risk. Markets rise and fall, and past performance never guarantees future results. That's why many experts recommend investing regularly in diversified, low-cost index funds and thinking long-term rather than chasing quick profits. You also don't have to start with $10. If your budget only allows $5 a day, that's perfectly fine. If you can invest $20 a day, even better. The most important thing is building the habit. Small daily actions create extraordinary long-term results. So the next time you're about to spend $10 on something you'll forget tomorrow, ask yourself one simple question. Would I rather have this today or give my future self a chance to build real wealth? That one decision, repeated day after day, could become one of the smartest financial choices you ever make. Because financial freedom rarely begins with a lottery ticket or a lucky break. More often, it starts with a simple habit, just $10 a day. If you enjoyed this video, don't forget to like, subscribe, and share it with someone who wants to build wealth one small step at a time. Thanks for watching, and I'll see you in the next video.